Hi guys, today we will be looking at cash receipts and cash payment journals.
These two journals are the most important journals of the Book of First Entry. And do you know why? Because all businesses rely on cash to operate. They need significant cash inflow in order to cover the cash outflow. And this is merely a record of the money coming in and the money coming out so that business managers can keep track.
So let's have a look at the layout of the cash receipts and the cash payment journal. The cash receipts journal records all the incoming cash, which increases the bank balance, while the cash payment journal records all the outgoing cash payments made by the business, which reduce the bank balance. Just remember, we said this in the accounting equation, that the bank is an asset, and when we receive money, the bank account is debited, and when we pay out money, the bank account is credited.
So, the first step is to identify which transactions goes into the cash receipts journal and what transaction goes into the cash payments journal. Well, this is quite easy. All the money with receipt number is money received and going to the cash receipt side. And all the money with ETF numbers are payments and going to the cash payment side. No other transactions are recorded in the cash journals.
Let's have a quick look at VAT before we move on to some examples. I'll make a video on VAT discussing that in fuller detail a bit later. But for now we know that output VAT will be affected by cash sales and credit sales. Therefore, the receipt from a debitor will not affect the output of the VAT account. And the reason for this being that the VAT was already recorded when the credit sale was transacted. And similar will happen with input VAT. Input VAT will be affected by the cash purchase and credit purchase. However, payments of the creditor will not affect the input VAT because the VAT was already recorded when the credit purchase was transacted. So how do we calculate VAT? First, we need to know that VAT is currently standing at 15% and is inclusive. So meaning it's already calculated in the price. So we have 15 over 115 multiplied by the amount. And in the previous slide we said that she sold water for 4,560 rand. So if we calculate that, then we know that the VAT is 595 rand. Now let's look at a few examples and say whether we'll record this in the cash receipts journal or in the cash payments journal. So Mrs. Bright opened a bank account and deposited 10,000 rand into the account and make out a receipt to herself. So where will that recording take place? Here we have the cash receipts journal, where we start with the date on the left, then the details of the transaction, the record number, then we have bank, VAT, sales and trade debitors, and then sundry, where we put everything that's not related to either bank, VAT, sales or trade debitors into that column. So we know that we had 10,000 that was given to the company by Mrs. Bright. So we know that the bank will increase with 10,000, and then it's not a VAT account. We didn't sell anything and we didn't lend anything, so it's under sundry for 10,000 for capital. Next, we know that she makes two payments. The first ETF is for 1,140 rand for rent, and the second ETF is for 6,840 rand for water to resell. So is this a cash receipt or a cash payment? If you said cash payment, you would guess correctly. Again, here is a cash receipts, a cash payments journal. We've again start with date on the left, details about the transaction, the ETF number, which usually should follow on each other because you would pay one account after the other. We have the bank that's credited because now we're paying someone else. VAT, that purchases, wages, sundry, with all their details as well. So we know that the first one is cash, where she paid 1,140 rand for rent. The VAT on that would be 149 rand, and then the rest of the amount is 991 rand for rent expenses. Then the other ETF that she paid for was 6,840 rand. That's also deducted from your bank. VAT on that was 892 rand, and the rest of that amount is 5,948 rand for purchases, because she purchased the water to resell. Next is she sells part of the stock, in this case the water that we talked about in the previous example, for 4,650 rand, and she made out a receipt too for that. So is this a cash receipts journal entry or a cash payments journal entry? If you said cash receipts journal, you would be correct. So we have the date the 6th, it was sales, it was the second receipt. Our bank would be debited with 4,560 rand. The VAT on that was 595 rand, and then the sales would be credited with 3,965 rand. That is the bank minus VAT to get the sales amount. She pays wages of 500 rand via ETF 3, so would this be receipt or payment? We know that with ETF it's a payment. So on the 7th she paid wages, it was ETF number 3. We credit the bank with 500 rand, there's no VAT, and wages will be debited with 500 rand. Then she purchased stationery for 570 rand via ETF number 4. So on the 10th, the details is cash, it's ETF number 4. The bank would be credited with 570 rand. The VAT amount on that is 74, and then the rest of that would be 496 rand, and the details for that would be stationery. Then she makes a sale of 3,250 on credit to that store on invoice number 1. Would this be a cash receipt or a cash payment? Good, that was a tricky one. It's neither, because it's sold on credit. Then she pays wages of 500 rand again via ETF number 5. So on the 14th we'll have wages, ETF number would be number 5, bank would be credited with 500, and wages will be debited with 500. Then she makes a loan from Loan Bank for 5,000 rand. Is this a cash receipt or cash payment? So we know she didn't pay that money, so she should have received it. So on the 18th, Loan Bank was record number 3. The bank was debited with 5,000 rand. There's no VAT on that, and then there's 5,000 for loan. Then she received a payment from that store for 3,250. You'll remember that was the credit invoice. That was previously the tricky question. So is this money received or pay? Well, it's right there. She receives the money. So on the 23rd, that store debited record number 4 paid us 3,250 rand, and then the trade debitors account is also 3,250 rand. As you'll know, there is no VAT. I explained that in the VAT portion of the video. Then At the end of each month, all the columns in the cash receipts and the cash payment journals are added up vertically, so you can see that we calculated bank, we calculated VAT, we calculated sales, trade debitors, and then the sundry amount as well. Then all the items that appear in both the bank column and the analyze columns, so that's all the other columns that's not bank. So to double check this, you can add the totals cross horizontally. So you can take VAT, sales, trade debitors, and then the sundry, and it should come to the same amount as the bank. This is called crosscast and is shown as CC.
The combined cash receipts book and the cash payments journal, known as the cash book, requires frequent updating. And in fact, a good control system do daily post and daily bank reconciliation. And two of the main reasons is for cash planning and fraud control. Cash planning is when cash are monitored for large payments or cash received. An extra day in the bank can mean a loss of interest income. When fraud is when the financial institute have a time limit to solve queries. For example, a check has a few days to have clearance, otherwise it will be reported as fraudulent and the check would not clear.
So there you have it, your cash receipts and your cash payments journal. Next up we'll do your debitors journal. If you have any questions, please feel free to ask, and thank you guys so much for watching.